My name is Dontez Lindsay. I am the general manager of Dux Trading LLC, as well as the lead trainer of StockCraft. I'm not a financial advisor, nor a CPA, and the content I create is for entertainment and educational purposes only. I trade in my account, and everything I do is hypothetical in nature because it doesn't happen in your account. My experience with trading is not typical, nor does it guarantee that similar results will be obtained by you. I am merely sharing my opinion with no guarantee of gains or losses in investments. Remember, day trading can be extremely risky. You should be prepared to lose all the funds that you use for day trading. In particular, you should not fund day trading activities with retirement savings, student loans, second mortgages, emergency funds, funds set aside for purposes such as education or home ownership, or funds required to meet your living expenses. Further, certain evidence indicates that investments less than $50,000 will significantly impair the ability of a day trader to make a profit. Of course, an investment of $50,000 or more will no way guarantee a success. With that out of the way, let's get into the content. Oh, there we go. Gotta delete this. Hey guys, good morning. First, let me double check the. I clicked everything right. Yep. We're live, public. See if anybody's talking in the chat room. Good morning. We'll wait till Ben comes in. I heard back from what happens with the public rooms. Yeah, we can use the public rooms. Nothing's wrong with it. You just have to accept the terms before you can talk in the public room. But yeah, everything's fine. The reason he got kicked out or booted was because he didn't accept the terms, because that's the only time you do get kicked out. I've been talking with people in there now. They've been asking me all kinds of basic questions like broker, and so I just went really into detail on that. So if you guys want to know my thoughts about TZ, specific glitches and stuff I do on my TZ personally, yeah, talk to me in the public chat room. I can go into more detail. And since it's look who just snuck in. Cat just burst in. You guys can just check that out in the public chat room. Yeah. So everybody's giving their information. They're spilling over into that. Let's see what the Freedom Challenge is looking at. Oh, since Steven's in China and he finally moved to a house that has better internet, he's able to do webinars now. So they're busy. All right, so see if anybody's here now. Okay, we got a few. All right. So I looked at MLGO. I did my normal thing. I saw a cheap stock, went on FinViz, saw it was from China, and I'm just like, ooh, pump and dump. Especially when I see it's a micro float. Now, it doesn't have any recent news. Like, recent news was like 2 weeks ago. But the main thing is, this looks like it IPO'd, even though it didn't. Like, IPO'd in the past 3 months. And this reminds me of a time where Steven traded something that went from, it was like $70 to like $90, and he called it an overbeaten down gap up short. And this looks like where it started from, to where it already gapped up about like 30% before, and it by that time it already had 3 million volume. And I thought it was like a pre-market breakout, just looking at it like roughly. But I think everything's a pre-market breakout because that's just what I do when I look at longs. I'm just like, oh, FOMO. If this breaks that high, like, how do I know this won't double? I'm signing in the stock graph because I'm being hunted by this cat behind me, but he's being blocked by my laptop. But anyway, this reminds me of that overbeaten gap up short that he did. And the important thing about that is, if it does end up being a gap up short, even though it's like under $3, like, which is a really cheap price, the max you can get from this is only, I think, 20% from the top. So that's not actually that good, because we normally go for like 25% from the top, which if you're using the right price, that's almost half the spike. But now you don't even get that. But the upside to that is, if it wasn't $2, if it was something like $6, it'd be a good gap up short, and it's almost guaranteed. Like he has at least 20 samples on things that look like they recently IPO'd in that time. I think it might even be in the new DVD. I still have to check on that. I actually canceled the stream around like 1:30 a.m. Because I tried to upload some stuff in the middle of the night, and the internet cut off because something happened with the automatic payments, and so you don't have customer service at night. So I was playing with my crappy internet on my phone to get everything back on. But first thing I did was tell everyone in the channel that I'm not showing up tomorrow. I ended up fixing the problem like 2 hours later, but that was supposed to be my time to watch the originals. Yeah, but the FOMO is back. Like, whenever I see, like, there's been like at least 5 tickers in the past 3 weeks where there was a spike, but there's no catalyst, or like no catalyst that I can see other than just the volumes going up, and it's a cheap stock, and it has either something to do with technology or healthcare. Especially the stuff that has patent agreements and things that people that look at fundamentals will look for, not people that look at like qualitative fundamentals, not quantitative. And it all just seems like a trap to me. But that pump part, that feels real. I was like, I could easily get like 20% on those. So I don't know. I'm just watching it for now. Let's see. Anything popped up? All right. So that's the only thing with volume to look at. We're pretty much dead for right now until something else pops up. The other things that have price and volume, TCBP. This one's a microfloat biotech. They just had a call. This doesn't really look like it's going to turn into anything anytime soon. But we'll see. OPGN, this snuck up about like 30, 40 minutes ago. It came up with like 15, peaked at 20, then came back. I don't know if that's going to pick up sometime later because they just got a key patent from China. And so as soon as I saw something mentioned from China again, match with the other one on MLGO, I thought this might be something that could, pick up later. Because OPGN's been around for a while. You can see that it fell off the top gainer, so that's dead. Now, what did pick up was MLGO, and with this one, it doesn't have a history of resistances, so, but it still doesn't have like news as like the major catalyst. So I don't know what to call these patterns other than like it's not ideal, because it's not even bouncing off like a layer of support or something. I can't figure out why. At the end of the day, it's not tradable because it doesn't fit a pattern, but it still gives me a little FOMO just because I've seen this happen so many times. And when it does get up to the point, since we're still in the pre-market, to where I can call it a gap up short, like right now at 65% with this 6 million volume and stuff, I still feel FOMO because I recognize this point when it went to 2 already, just bouncing off a little bit of the whole dollar, and having a pre-market high, just watching this be a pullback of like 60 cents off this it's not a whole dollar, but just that pullback at this time, it's just so normal to see that. And then it's going to pull back one more time before, like, either right before the pre-market open or like right at the pre-market open, and then pop off. But I can't really call it a pre-market break yet until it breaks, and two, until it meets all the criteria. Now it already has the minimum $2. It already has the minimum 3 to 4 million volume. It doesn't have a catalyst, which makes it already like 1.5 star, or 1.5 stars off of the 5-star. Recent history, I would have preferred that it had like a smaller resistance to go over. What does this look like that? Yeah, but this is the only thing we have to work with right now. Okay, looks better. Okay, you go to the yearly chart. This thing messes up, but it's okay within a month and 2 months. Okay, so maybe it really did IPO in December. Yeah, 12, 14. Okay. Oh yeah, I remember what I was doing. Bringing up. Went in small size at 2.7 mlgo. I think it's worth a small size short given the current market condition. What, early shorts always winning, and then midday to late day squeezes. Tiger stop though. Oh, tighter stop. Yeah. We did see, what was that ticker? I'll show you the trade review I made yesterday. We have been seeing a lot of stuff fall early in the past few weeks. I can't tell if everyone's broke, but still want to trade, or like what's going on. But the main thing is, we had a FWBI yesterday. Now FWBI, this one, I like calling everything a pre-market breakout. This one actually didn't even fit a lot of the, not a lot, but at least one of the major conditions for the pre-market breakout. That was, it had to be a flat chart. But the reason I called it that before was because it was sitting on top of a support. Because like if you looked at it just on the daily, it looked like a really bad gap through resistance. But I knew it wasn't that. Like, where's a larger chart of it? Oh wait, I have a whole platform right here. At the end of the day, FWI. At the end of the day, it both of those tickers that we looked at yesterday, they weren't ideal setups, but they look like they can turn into something. And so I'm trying to predict what it turns into. FWBI. Yeah. But the main thing is this dropped pretty early, and I was kind of expecting it to at least go up to like 8, even though it did have resistance up there. But it's like very light. Yeah, so here's the chart on the daily and within the year. Like you do have all these 45s, these 30s, and stuff like that. But there was a split back in, I think it was right before this September. So it was a split back in August. So everything was a fresh chart before that point. And this is the only individual resistance that matters. Cat is addicted. But this opened at like 450. And that's really close to the high of this candle, which is the only one within like major influence of what was happening on the daily on here. And so yesterday, we saw this close, or this spike from the close at 442, and this candle goes up to 490. So there's a good 50 cents on about $4 or $5 stock. So it's technically within the daily candle. And you know, if you did gap through resistance kind of calculations, like first you just think in logic, like this is way past that candle. But you do the gap through resistance stuff, it looks like that's where it actually was topping. It was closer to like 450, 480 and stuff like that. Because these little resistances right here, there's no consolidations that are worth mentioning. And at the end of the day, it just didn't fit any pattern well enough to be anything. And so the consolidation here, the top of that is at 450, like really close to where this started from the previous close yesterday. And I was like, okay, so this kind of makes this a flat chart because this is a support now. And then everything, like in terms of consolidation, is way below it. It has no influence on this. So the only thing I have to worry about is everything up to December. And pretty much this is the consistent resistance and stuff now. I was like, oh, okay, we could probably work with this. It fell super early. And, you know, you see these consolidations over here, but you look on the daily, they don't even have like up to 5 million volume in each of these days. So just real confused. Like this wasn't anything, but a lot of people were calling it some type of pattern, or was it tradable and stuff like that. And when you look at it, I'm like, even I think it's somewhat tradable. I just don't know what to call it. But it wasn't a pre-market breakout. So just wanted to fix that because I was calling it that, I think. But I was calling it like a 2-star. I want my note come up. Oh, okay. Yeah, so pretty much that. It wasn't a gap through. It wasn't anything really. It wasn't a pattern. But it did fall. And so I don't know what that says about the market. But yeah, that happened. And this was also really crowded. No, SNOA was really crowded. This one had like 2-3 million. No, what was it doing? Oh yeah, SNOA. Now that one, I was calling that a gap plus bounce. Now with that, I had to I was calling it like a 2-star gap plus bounce because I think it was up too much. Yeah, but I wrote the details down. You could see that. I'm gonna see if anything popped up for now. Nope, MLGO, still the only thing. And this TSLL is not up enough yet. Yeah, but the SNOA that one fell way past its normal profit margin. If you did the normal statistics, it was supposed to stop at like 190. It went all the way to 150. So that's another sign of a lot of sellers or just a really aggressive shorts. Can't really tell which one. But the main thing is this fell super early as well, because I had a window where the actual resistance was on this. Oh yeah. Down here. If we're talking about like ideal, this was supposed to go from the close of like 121 all the way up to its resistance, which is starting at looks like 260. Yeah, about 260, and goes up to 330. Actually, this is 280 is when the resistance starts, and it fell at 260 before it even got to the resistance. But the only thing with that is I think it fell during the gapping phase before it actually even touched the bounce short. Because when we think of bounce short, we're supposed to think of like whole dollars and half dollars and stuff like that. But it didn't even get into the resistance. It didn't even touch the resistance. So that fell short. But to be fair, the stock was crowded. So we expected either just a major drop at the open or a large spike closer to like 10:30. But anyway, I heard in America, Dwayne Johnson was on the news to talk about inflation. Yeah, I think I know what you're talking about. They called it something with the rock on the headlines. What is wrong with your country, LOL? To be fair, he has like a lot of money and a lot of investments, so he's probably feeling a lot of that inflation. He also probably had a lot of people that are experts in that field to give him fancy words to say or fancy stuff to say. But to answer your question, what's wrong with them? Your guess is as good as mine. But back to the SNOA. Yeah, this one, that resistance that we were using, it did go as low as 263. And it stopped at 268. The main thing is when we talk about ideals, Steven always told me never to use the bottom of these individual resistance candles, because that's all I did last year. Especially if you're going to track it inside of your data, because it's going to create like a gap between your ideal and you could tell where like early shorts are going. I don't remember this actually going to 263. I thought this was actually 280, which kind of makes me feel some type of way. Yeah, maybe that was like a pre-market high that I was thinking about. Let me see. No, it went over the high. Oh no, maybe I'm just seeing stuff. Or that was one of the calculations I made. It was like a 20-30% push. I don't know. But MLGO, that's doing its thing right now. To the person that shorted this, I still got 15 minutes. Let's see what the borrows are. This is still a micro float. Yeah, micro float, Chinese company, infrastructure, doesn't even have news. Cheap stock, pumping up. I need to start tracking a lot of these. Just like no news gap ups. Like the market's slow, but it has activity. I don't know what to call it. Other than not ideal. Let's see. Morning. FWBI might be a reverse split pump and dump. They tried to push it through 7.5, but it didn't work with the market condition. They dumped it all afterward. Oh. Okay. Okay. We've been seeing a lot of pump and dumps lately, especially that naked short seller revolt movement thing. Like the VRB or VERB, where they use the FBI officer news to fight the naked short sellers. They used that to pump the stock in the morning, and then they did an offering at night to put the stock right back to where it started. That was dirty. Normal penny stock, but dirty still. I didn't catch SNOA on the spike and paid the expensive locates. I feel you. I have a knack for waking up early enough to see the borrows be cheap, getting through the spike around like 5:30 when they become slightly more expensive. They go cheap again, and then I wait till the last moment, and then as soon as I do want to trade, then they're back to expensive, and I'm still thinking they're cheap, and then I get it at the peak, and then I'm just sitting there like just festering on how much I just paid for these borrows in terms of percentage from my total account. I'm just like, I want to use this. Oh no, already tilted. I haven't even made the trade yet. But yeah, I didn't touch it either. SNOA, I was waiting for like it to go deep into the resistance. Like mostly to hit somewhere closer to a consolidation. It's like when we go into the, I wasn't that far back. Closer, 3 months. When we go into it, 280, that's why I was probably saying it. 280 was supposed to be where the consolidation was. And then the next was supposed to be closer to like 320, 330. Like I was just going to shoot for 3. I had no clue it was going to, not no clue, but it was very unlikely that it was going to drop just right at 260, which is the close. And you can use a close for resistance. But, you know, with the resistance, I'd rather stick to the consolidations, the whole and half dollars. This close was, that's some stuff. It's not cheap, or not, what do you call it? It's not cheating, because nothing's cheating in this. It's just, I don't like it. Because if we go to GNS, this did, this had some resistance around, I think it was 270. And if we start looking at the closes and key levels on that, it does some really similar stuff. So I'm trying to come up with a thesis on what do early shorts look for. Because I do have like a very general shorting kind of template. But the main thing is when there's a little liquidity in the market, shorts are doing their like very early stuff. I want to have a systematic or process driven approach to look at the market. So I can join the early shorts and stop just wasting borrows or borrow fees. Because I don't want to just start going half in at the open like Steven would tell you to do. Just because, you know, if you're under PDT, you just end up wasting the day trade like that. And, you know, my theme for the past week or something has just been protecting my day trade, getting extremely cheap borrows, and just waiting for an ideal setup that just never comes. But I do recognize each one of these early the things that the early people would look for, but I'm just like, I don't want to give myself a bad habit when, 2-3 weeks from now all this just changes and all these early people become my liquidity when they get squeezed. Because like we already do see the squeezing happening today or recently. We see it transforming. It's just the only one that was actually tradable is the one that went up to like 390. And it was a bounce short. Yeah, that's all I'm gonna say. Now, with GNS, if you go on the daily chart for this one, we know this was the one that had all the squeezes. If you take the close from the first day, it pulled back 20%. We knew this killed some of the volume, and it was already had a lot of volume killed the first day just because they did convertibles. When this was supposed to like actually just blow up, they stopped that momentum by converting the stock, and then it came all the way down. It neutralized, and after it neutralized, it kept going back up. And this is something that you can see on stuff that goes into like multi first red day move. But once it had liquidity back in the stock and did this like 20% move, that's where it was supposed to like, be top heavy. And now if we remember this close around like, 470, this only went back up to half the spike that it created, half the panic that it created. And then it found some type of resistance. That's normal. Finding resistance at like 3/4 or half the spike, but mostly 3/4. I'm like, okay, this became top heavy. This was something you could have traded because this was like, 20-30% push at the open. And I'm like, okay, and it's going into a light resistance, like 3/4 of a panic. That's a light resistance. When this dropped, just looking on, the daily move and stuff from the high, this is still within first red day kind of move. Like I would just consider this, just looking at the close to the open, like a sideways kind of day. And when this went back up again, this 470, that was the close of this day and the close of that day. And if you go back to the first day, it was about 3/4 of the panic. And so like that's a light resistance, light resistance, light resistance, and they're all just layering. And so you had a lot of people just shorting into 20-30% push and then noticing like those layers right there. And they just got like a very tight short. And then it actually cracked the support overnight. But the main thing is this just proves that a lot of the early shorts are killing it. But if I go back to that bounce short I was talking about before, they were also getting squeezed. Because like I just want to make a clear map of each phase of a market cycle. I know what the ending looks like. It looks really close to the beginning. Like just, yeah, but Steven talks about it more in detail in the Trader's Edge. I just want to wait till everything's fully out before I just go through that for hours. I mostly just want them to edit it too, so I don't just keep going back and forth. Because that's exactly what I'm going to do. Every 5 minutes, I'm going to be taking notes, even though I'm supposed to watch it all at once, then take notes. Yeah, but that's my concern right now. I haven't traded in weeks, which I'm okay with that. But this whole taking 2 trades per month thing, and then still losing on them, like, oh no, I'm fed up. I got cats to feed. Oh, I'm gonna have to throw him outside. He's gonna bring back a rodent, and we're gonna have to sell it for twice as much because of inflation. Okay, I'm done. I'm just happy the internet's back on. Now, what's it doing? I was doing something. Oh yeah, I got to figure out. Not figure out. I have to check on them. Okay, the webinar started. Where's Ben? I've been waiting for him to come in. Yeah, so if you guys want to get into the public chat room, hit the link in the description and it should take you to the Discord. You should have access to the public chat room once you accept the terms and conditions. If you don't accept the terms and conditions, then it boots you out. And that's what happened to Ben yesterday. I was saying something about this one. ML. Oh yeah, no news. Can we really call it a gap up short though? Because of the previous history. We could if we're talking about that really big, this one. Oh, here. Well, it's a micro float. I should not touch it. Emphasis on should. But I don't see anything else popping up. I know someone did short this early, and I think they shorted it around like 270. Which is fair because it's, pre-market top. But it's still a micro float. And so the main reason I don't like trading micro floats, other than, just the constant losing on them before. Oh wait, let me answer this person's question. Didn't catch it. I think recent reverse split gives incentive. Yeah, I think recent reverse split gives huge incentive for shorting. OPGN and PCB did a reverse split recently, but they don't have enough gapping percentage to short into today. Yeah, so splits, according to Ducks Trading LLC, it refreshes the chart. All risk management is a lot harder. And because of that, a lack of risk management, it's easier to panic. Longs always panic. In terms of giving incentive to short, I think incentive to short only comes from things that will cause a panic. And that's a resistance, a consolidation, specific times, lower highs, topping patterns, and stuff like that. Another thing, according to Ducks Trading LLC, if we're looking at a recent reverse split or recent split, we're supposed to look for warrants, like things in the fundamentals, like the quantitative stuff in the financial documents to give us some type of idea of where warrants or convertibles and things like that, the pump and dump kind of moves, any kind of news that can scare those longs or the buyers that are eventually going to end up becoming bag holders that form that topping pattern. And we want to do it in a way where we're going to do it on each one of those trades that involve the same kind of setup, because it's a fresh chart. And that's where you connect each one of those charts together. Is you say this is at a clean slate, and you have to come up with things that make this ideal. Or when I say ideal, I mean like it gives like 15% winning percentage in your favor every piece of evidence of weakness, not now, but later, once it gets to like the minimum gapping percentages, like now, like 60%, 80%, like 100, 120, things like that. And then based off of those pieces of the evidence, like some are going to be stronger than others, and that's going to be based off your personal statistics. And that's the only edge I would see. Like you have reverse split, then you have to look for warrants and documents. So I can see where you're saying that it gives incentive to short, but I feel like there's another step after that. But you did say they don't have enough gapping percentage, which could reveal that either everyone's broke or they're too froggy, like they're jumping on everything. The market's open. And can anybody else hear that? Like when I'm in this public chat room, I hear market is open from TZ, and then it's a good 2-3 second delay. Then I hear it from Naruto. All right, I don't see anything else popping up. Just this MLGO. I think XM is a company with like $1 billion cap. TCBP, it's also a micro float. Yeah, the only thing with range and volume is MLGO. So it's another one of those slower days until something, pops up. Now, it'd be different if this had a resistance. Kinda. The reason I don't like trading micro floats. Before I continue, I remember somebody had something else to say. 2.6 is also the spike top next day morning. You were talking about the resistance, how it started at 6, and then this was the top of that day. Yeah. That's what I'm trying to say. Like, you're not supposed to use the bottom of the resistance because you're not even like hitting the resistance yet. You're like intraday, you're not. On the daily candle, you are. And so I think that's a sign of people going in a lot faster on resistance plays. To where, if you have more money in the market, like closer to a bull market, which everyone thought it was for a little bit, especially since we've been hitting 400 for like multiple days now. Now we finally broke through it. But remember the SPY and penny stocks, they have very indirect kind of correlations. It's not a direct correlation. It's just like a very light connection to the sentiment of people in the market. He almost fell off the desk trying to get a post-it note off his leg. But what's it doing? At the end of the day, this SNOA, I will not put it in my notes, or like I'll track what happened on the day. And so like next time I review my reviews, it'll be in there, but I'm not going to track it under my gap up short or see that's the thing. Like I want to put it in my gap up short, but I don't want to put in my gap plus bounce statistics. And then as soon as I came up with that thought, I kind of felt like I had to put a very specific note on the side uh, for my gap up shorts just because of that. Because this does look like one of them. Here. Like I considered this a failed gap plus bounce. But who could say this failed when the returns are so good? This is like 60% from the top. I'm like, ah. And I just watched this bleed the entire day. There's just something else I was saying. Oh, yeah. MLGO, not looking too well. Probably a punishment for me in breaking my discipline to short volume leaders too early. LOL. Well, it's kind of a punishment for me too. Like, sorry for your loss. But like I was thinking about buying this at 2 or 220. But again, like that's just my natural FOMO when I see a high in the pre-market and like everybody sees a top. I see a target. Like when I'm in the long bias mode. But then I can't give myself a good reason other than cheap price, low float, something to do with China. I want to be in this pump. Cause I have access to Steven's stuff, and Steven has access to a lot of other stuff, and he's in China right now. And I've been sneaking at some of the other stuff, and I started looking at some of the data that has stuff to do with long, and a lot of it doesn't make sense to me right now. But the thing is, the stuff I did see, it makes me think a lot more not task driven, but process driven when it comes to the long. Before, I'd just be looking for a pattern. But now I see some of those people, they don't even use a lot of the patterns, or they'll just see for pieces of it. Like it reminds me of the trader's technique, where once you have like the minimum stuff, then it's all about just watching for the smaller time frame patterns and sizing in positions accordingly, which I already knew about that. But I'm just looking for ideal stuff because I'm under PDT. Like the whole reason I can be so disciplined, waiting like patiently for all these patterns and stuff, is because I only get 3 attempts each week. And 2 weeks ago, I used all my trades in one day. And then the next day, all the stuff I wanted to trade came. I was so mad. Like, yeah, last 3 trades, I did one on Tuesday, and then the next 2 on Wednesday. At the end of the day, I came up like $200 on the week, and I was okay with that. But, those trades that I did come up on, I think 2 of them were on margin, and one of them I lost, or no, 2 of them were cash, and then one of them was on margin. So at the end of the day, if every one of them was on margin, I would have made, closer to like 600. And then, that would have been a bigger win. So I'm just like, okay, maybe I should only save for margin play. Out of the last like 6, maybe 5 opportunities, they've all been cash plays. And then the 2 that were margin plays, they never developed enough to get to it. And so I'm just sitting over here. I'm like, am I really going to trade like 20 times in this year? Because if I do the margin play approach, I can. You actually won MLGO? Lucky. LOL. Pretty much, I've been playing with the calculator and stuff again, and I'm only aiming for minimum 15% rewards, and I'm trying to get borrow fees under 5% of my account size, and I'm risking 5% of my account size. So minimum, that's a like 7.5 risk at my max loss plus max borrow fee. That's like 10% max for whatever loss I'll take in like one trade. And if I get one win, I still be up like 5% on the week, just off of that trade, stuff like that. So at the end of the day, I'm trying to get back to 25K. And so that takes me about 10 trades if I'm only using cash. But if I use leverage, then it only takes me 7 trades. And I'm like, okay, this is doable. And I know I'm going to get some wins where they're like 20, 30% and stuff like that, especially if I size in correctly or patiently and stuff like that. Because I've been patient. Like, I've been looking at morning plays. I've been looking at afternoon plays. We did get 2 decent bounce shorts. One fell a little bit earlier than I expected, but I can kind of say that's my fault too, because I had several chances. And I literally just watched it thinking that I want to go in with one size. So I want this to be like perfect or nothing. And then I got the nothing. And then I'm just paper trading on the side, even though I have the borrows ready and stuff like that. And it bled a lot. I don't know why I can't remember that ticker. I already suppressed it. That's how bad it was. Hope I tracked it. Oh, that was BIAF. I don't know why I tracked BXRX. This one was a microfloat. Yeah, but it was still one of those things that it was tradable but not trackable. But BIAF, that was trackable. But the only downside, which was the main reason I didn't trade it, was that it was cash only. So I didn't know if we would see stuff more ideal in the later part of the week. So I was like, okay, I'm just gonna save my trades. I'm really stingy, or not stingy. What do you call it? I'm really frugal with my day trades, because I'm just waiting for those 4-star plus setups, which makes me think I'm too worried about the profit margin, because you are supposed to miss a lot of those trades for better trade selection. Because I already made the claim, I'm trying to get like 50 wins in a row. But at the same time, I do want to practice having longer win. Like, I don't want those like 7% wins. I want like average 15, but still have a technique that makes me still able to get those 30+%, like even 50% win. Like, I'm trying to hold stuff all the way to the end of the day, but take profits as soon as I see a flush. And then, like, depending on how it approaches those $0.50, 20 cents off the dollar kind of areas, and things like that. Like before it was all in, half, or all in, all out for me. I'm stopping that habit. But now I'm just so bored. MLGO doing a tug of war. Lucky didn't lose on that one. Actually won on MLGO, luckily. But I might need to cut this early short habit. It's gonna cost me later. That's true. Usually that habit picks up during December when biotechs are like really popular. And then those people get cycled out by March, when everything just goes dead during summer. When summer picks up. I might need to cut. MLGO is nice. Gap and crap. Gap minimum 70%. We saw SNOA go up there and it just crapped. It was two other ones that went up to 60% the other day. Like I'm telling you, the early shorts are killing it. Now I could go in on these gap up shorts and just call it a 1-to-1. And the reason I'm calling it a gap up short is because it has either a decent consistent resistance or it has an individual resistance that makes it a gap up short. Like something proves that this is going to fall early. But we haven't been getting like the complete ideal stuff. And I know you don't need the ideal stuff, but with the current market condition, like what's being offered, everything is like that. And it's not like you don't see it. It's just if you don't have that extra evidence, it's going to be hard to hold through the appropriate key levels and time. Like if I try to go in on a lot of these early shorts, I probably would have been stopped out on the pullbacks around like 10 o'clock. Or if I did hold through, I'd probably just take off like a third. But then I can't add more because I lose another trade. Now, if I could go in margin, that'd be different. Because I really think I'm just too focused on these profits. Or like it's not even the cash. I just want to have enough room to take off. Like practice that technique pretty much, like the sizing technique. Because I'm still going to be risking like very tight. Like if I go in with cash, I have more room to do stuff. But on these like $10 tickers, like only using like a 20% risk, yeah, cash is okay. But if I go in like with time to leverage, I only have like 10% to like risk. That's also okay. I just have to look for like a lower high or go into a push off of a right under a high. Or I wait for a crack and then I only enter on the retest and things like that. Like I will be decisive. But a lot of the stuff is just not ideal. Like even some of these morning pushes. Like yeah, you could do the like 10%, 20%, 30% pushes. With certain volume estimates. But yeah, at that point I'd be scaling in on anything not ideal. Like anything 3-star and below, I'd probably be entering 4 times. Like a 1/8 position, then double that, and then I double what's in there. And then the last one I double again after confirmation. Oh, I'm short 296. Oh yeah. Something else still didn't pop up yet. I think this one's a $1 billion cap. Solid bear pattern on 3-minute and 5-minute time frame. Yep. Just got to be confident in your strategy and your strategy's true risk. Oh, and know your strategy, then play off that risk. Yeah, that's all trading is risk management. Scale it to the long term, adjust it for the short term statistics. All I know is I'm not putting another 25K in this. I'm going to grow this account. And then I'm going to print out my statement and I'm going to throw it at Steven. I'm like, take that. He's going to be like, come to me when you get $1 million account. Depends on how long I keep the streak up. I think when I get to 50K, I was advised to split the account and then open up another account. What happened last time was I went to 80K and I went to option. Then it was all downhill from there. But around that time, I was actually opening up Guardian. So I opened up Guardian and I opened up, I think it was like Trade Station. But that was like for option. So I haven't even touched that one. I did put a little money in it, but yeah. I should probably take that out actually. Yeah, I want to get to two accounts eventually, but I'm not going to do that until I get back to at least 75 plus. Because I want to start doing other strategy. But until I get past 50K, I'm doing the fixed trading stuff. Like if I was only going to use gap up shorts and I stopped focusing on cash only accounts, I just stick to the 20 to 30% pushes on anything I considered over a 3-star. And at that point, I'd have like a 70% winning percentage. But 3 trades a week, that just doesn't sound ideal to me. Especially if later in the week we get some resistance plays, like whether it be a multi-day runner version or an intraday like gap plus bounce short, or even gap through resistance. Just got to, because it's not a perfect setup for me. Okay, cool. Not very confident with it. More like a bet given the current market condition. Gap and crap with such high volume is very risky. Good luck to you though. 8 MLGO still might go to gap down. Yeah, definitely. Especially since it's up on no news. Now I think about it, that is a bearish thing, right? Since it doesn't have news. The whole time I've been looking at it from the other side. I'm just like, you need news, so I have to gauge you. And I think the only reason I say that is because I've seen at least 1 or 2 tickers that went up like 200, 300% on no news. And that just makes me feel some type of way. I kind of want to figure out what that was now. No news. SLRX. think my search engine is trolling. It's bringing up some. Yeah, it's trolling. Good way to review, but not a single one came up with no news. Some of them don't even have the word news in it. I don't know why it's being brought up. AIs are taking over, guys. That's what's happening. These aren't early shorts. These are AI. All right. Now I'm talking about AI. All right, guys. It's time to head out. I guess I'll see you guys tomorrow for oh, here's one. SNTG. This was a microflow though. Well, this is a microflow too. So let's see how similar they look. All right, so this one, pre-market high, slight break over the pre-market high, probably about 10%, maybe 11. So it's always that 1% that counts. 1% a day. That's all it takes. This one is SNTG. This was also from China. Low volume, no news, micro float, gap up short type 1, but it had resistance and consistent resistance. The one we're looking at doesn't have. Looks pretty volatile. The intraday looked like this. So looks like I tried to trade it and I got squeezed. Or not squeezed. I covered right at the top, got juked. That's what happened right there. And I covered right at the pre-market high. Wow. Where's the I didn't even show the results. Trying to get away from me. Hold on. I have your Kimfo. What was it? January 19th. Wait, what? That doesn't make sense. Yeah, that doesn't make sense at all. Yeah, that would have been last week. Oh. Oh no, it actually happened on 11/4. Oh, I must have reviewed it on the 19th. Okay. The short-term memory trader. I want to say don't get old, but I'm not even old. Don't do pizza or don't do drugs, kid. What am I doing? Oh yeah, I remember. Yeah, so this one up on no news. It's also from China. It's a gap up short, and it did a double top before it came down. Now, if we look at today, this did do a little double top. Like when I say double top, I'm not talking like intraday top. I'm talking about it matched a pre-market high, and then it came down. They're both micro floats, so it does have a lot of similarities. And yeah, this one didn't have a catalyst. I don't think I showed anything else off of that. But if we're looking at how much profit actually came out of this, for me personally, I got juked at the high because I probably kept it really tight. Yeah, but it looks like this went all the way to 11 a.m. Well, 4 p.m. Here we go. It went all the way to 4, and it went up to the pre-market high. So 4 from the high. 6. I think that's 30%. I don't know why I did it that way. 4, but yeah, about 30%. What's it doing? Now 3, 7%. 215. That puts you at 220. Sounds about right. On a good day, at least. Five. The close. Hey, cat. Pick up the one. Get up. Right. Back. Close. 241. Okay. So modest would be 241. Aggressive would be 220 in terms of cover. Like one's half and the other one's 30% from the top. So 30% from the top is like closer to 60%. Hey, don't get into the habit of laying on the mount. All right, guys. Stay safe. Good day. Later, bro. Good luck to you, though. All right. I'm going to head out, too. There's something else I'm doing. Like, it was, oh, yeah. I just wanted to see how much I lost on that. 11, 14, I think. The fresh internet. How can you? I'll grab your tail. SNTG. Okay, I lost 7%. That's risk management. That's okay for me. $200. Went in 500 shares. Yeah, sounds like the full. Yeah, that was the full. That was the full size. I think that was cash only. Yeah, I borrowed 2,000. Thought there was a way I could see how much I executed. All right, guys. No, promise. I'm leaving. I'll see you guys tomorrow. How do I get back?